Market Monitor tonight is here to talk more about the record-setting day on Wall Street and the stocks he's adding to his holdings for 2014. He is Peter Sorrentino, Senior Portfolio Manager at Huntington Asset Advisors. Peter, welcome and good to have you with us. Your prediction for the S&P 500 next year is about 2047. That's roughly 11% higher than it is today. What are you worried about that could cause that prediction not to come true? Is it that earnings won't be as great as you forecast? Is it that the multiple won't expand as much as you foresee? What worries you?
Well, Tyler, you touched on a couple of the key factors right there. When you get to later stages of a market such as this, and we begin to see this take shape over the summer, you go from the value market to a growth market, and that's built on PE expansion. Normally, rising interest rates and PE expansion don't go hand in hand, but we had a collapse in commodity prices this year, kind of the final act of what had been a almost decade-long run for most of them. So that, in our mind, presages a return to higher PEs next year. That means we're going to have a more volatile market. Anytime you get that kind of forward-looking and forward discounting, the market gets more volatile, and we had a sort of dearth of volatility this year. So in our view, that in a market where psychology is fragile, that could be a real issue next year. We could see, again, you talked about the 10-year. Our fear is that if it spikes for some reason on bad news, that also could rattle investor confidence. But we do see earnings growth continuing next year, a lot of very positive fundamentals in the U.S. economy. So it will be a more volatile year, but we think at the end of the year, we actually post some nice returns.
And you have a couple of stocks that you think will post nice returns in the new year. Let's look at some of them. You have Dover as your first pick. What is it that you like about this company?
It's a continuation of a theme we've had for a couple of years now. You're seeing a renaissance in a number of different sectors of the U.S. economy: agriculture, energy, manufacturing. And Dover, behind the scenes, is really built into all of those. And we think that they'll continue to be there, and this is a good market for them. It's not a cheap stock, but it's a very, very profitable company, and it's got the kind of what we think earning potential that will drive the stock price higher in the year ahead.
You like some of the large cap multinationals. That's one of the themes that you're hitting, and John Deere is certainly one of those. What's going to drive it in 2014?
Well, Deere really suffered from the collapse in commodity prices this year. With good harvests around the globe, the price of the commodities drove the stock. Yet Deere's earnings continue to go higher this year. The stock is one of the most profitable in its industry, and yet right now is actually trading at a discount to some of its foreign rivals. If you look at Mahindra, Komatsu, Kubota, Deere is actually trading cheaper than they are, and yet it's by far a much better run, much more profitable company. We think the theme of food and better diet around the globe continues, and Deere is, in our view, the industry leader, and at this price, it's the kind of stock we want to own.
Peter, tell us about IBM. This is another one of your picks. It's had a very rough year. Why do you think it's a buy at $184?
Again, we think we're into the later stages. Technology was a real hit or miss over the last couple of years. The likes of Apple and Facebook getting an awful lot of the attention. Again, here's a very, very profitable company, great margins. It's probably selling at a 30% discount to the likes of Accenture and Hewlett-Packard. So it's the kind of value name, but it's a well-run company. And we think, again, it fits into that renaissance for American manufacturing and American export. And with some of the highlighted security glitches we've seen in recent weeks, we think companies are keenly aware of their vulnerability, and we think they're going to be spending pretty heavily to protect themselves from this kind of intrusions going forward.
All right, Peter, we're short on time. Do you own any of these stocks personally, or do you have them in your portfolios?
We have them in our funds, do not own them personally, and we are less than a 3% holder of all three.
All right, Peter, thank you very much. Happy New Year to you.
Happy New Year to you.
Peter
Thank you.
Sorrentino is with Huntington Asset Advisors.